Hello, this is Jordan, and this video is being recorded on the late evening of January 12th, 2017. Thank you for joining me today. In this video, I'm going to discuss how you can find companies with immediate takeover potential and how and what to look for when buying quality and value. Now, there's four criteria that I have in trying to spot the companies that are immediate targets. In other words, I'm looking for companies that have the potential to be acquired in 2017. Now, starting off, the deposit size is very important. The deposit has to be able to produce 100,000 ounces a year. Anything that's below 100,000 ounces a year, then the pool of companies that are going to be interested in acquiring that junior company is just so much smaller. So it's a good cutoff to use in your research. And also, the deposit should have at least 2 to 3 million ounces in size. Now, the stage, since we're looking for companies that are immediate targets, then the deposit should be operating, it should be in production, or it should be through the feasibility stage. And through the feasibility stage also means that it's done with the permitting or close to being done with the permitting. I mean, when a company has gotten its final permits, that makes it that much more of a takeover target compared to before that point when the deposit isn't permitted. And so, with that being said, jurisdiction is another one, but we're really, in regards to jurisdiction, we're just looking for deposits that are already permitted, will be permitted, or can be permitted. Next, this is obviously very important. The deposit has to have high margin potential. I mean, it's something that can earn a good return at 1100 gold, 1200 gold. I mean, something that needs 1350 gold, 1400 gold. It's not a takeover target. So we're looking at the deposits with the highest margin potential. I mean, deposits that can exist at 1100 gold or even $1,000 gold. Finally, last thing to note, the deposit should have some growth potential. That's obviously a bonus. Acquirers, they want to buy something that has upside because, as we know in mining, once you have it, you have to replace it. I mean, you mine the deposit, it's going to go away in 10, 12 years, 8 or 9 years, whatever it is. So if there is potential for another deposit to be found, if there's real district type exploration potential, that's a huge bonus for these companies that they might be getting more than what they know is already there. Now, moving on, let's talk about criteria or some criteria for buying quality and value. And as far as quality, we're basically looking uh, here for the same things that we discussed just a minute ago, but we're looking at an earlier stage. I'm focused on the exploration stage and maybe something that's kind of in the middle stage or advanced exploration. I This does not pertain to real, you know, early days ground floor type stuff. Um, I want to look at deposits that perhaps already have a resource estimate. They're showing strong grade. There's potential for the resource to grow. Keep those things in mind. Another point is industry sponsorship. That just means that another company, a larger company, or a major company has taken an interest in this company, and I mean that is a signal of validation for the junior in the deposit. I mean, that doesn't mean it's 100% going to work out all the time, but it's definitely a good sign. It's good validation. Now, with respect to value, I mean, this is kind of a no-brainer, but simply put, you want to buy things at lows or buy things that are trading off the highs. Now, several weeks ago, a lot of juniors, remember they had corrected 40% to 50% or even more during the correction we had in the sector. And even though the sector has had a really good rebound in the past couple weeks, there's still some value to be had. I mean, you don't, if something's 25, 30, 35% off its highs, I mean, you're still buying it at somewhat of a discount. And just looking over the long term, if you strongly believe that a $1 stock is going to go to $2 or $3 or has potential to do that, then if the low is 80 or 85 or 90 cents, I mean, if you buy it at $1 or $1.05, it doesn't really make that big of a difference. And I mean, I should take my own advice because one of my failings is being a technical analyst. There's a hidden part of me that always wants the perfect entry point, trying to buy the absolute low. And I mean, the most money I've made has not been from market timing. It's been from buying quality and holding on to it for long periods of time. Now, with respect to optionality plays, they don't really pertain to what we're talking about here. I mean, they're definitely not quality. Optionality plays are not going to be acquired anytime soon. As we know, they're basically an option on metals prices. And so, but you can find value in optionality plays, and you could find value in 2015, late 2015, even early 2016, even a month after the sector had bottomed. So, if gold rolls over again and goes back down to 1050 or even 1120 again, you could see these optionality plays get a lot cheaper. And those are the times when you want to consider the optionality plays. You don't want to be buying the optionality plays when gold's really overbought or when there's some kind of a breakout. Especially, especially over the weeks and the next few months. I mean, eventually buying breakouts is because we're in a bull market. Eventually, buying breakouts is going to work fabulously, but not quite yet when gold and silver still have some downside risk. So you want to be careful about uh, buying the optionality plays unless you're buying them when metals are significantly oversold and trading near lows. And so this is some of the criteria that I use in my own research and in my premium service. And I would suggest make a watch list of companies, track it, and then keep tabs on what is the cheapest. And I mean, obviously, there's probably, I mean, if I have a watch list of 30 companies, there's probably a handful that I'm always going to want to own. Your absolute favorites, you're going to want to own them. You can buy and hold them. But uh, generally speaking, you can keep a list like that and then just focus on uh, trying to buy the things that are the best values. I mean, everything is not going to be overbought at the same time or oversold at the same time. Everything doesn't immediately rally when the sector hits a low. So these are some things to keep in mind. That's all for this video. You can follow all my work at thedailygold.com. Opt in there for my free newsletter. You'll get a weekly update every Sunday morning, which includes my most recent thoughts on the sector and some snippets from my premium update on Saturday. Also, you can subscribe to this channel here. This is my YouTube channel. All the videos that I publish are here. Thank you again for tuning in today, and I look forward to publishing another video update for you in the next couple days or next couple weeks. Thanks so much.